I think that the sooner we get to something, the markets just don't like uncertainty. And I think just simply knowing what's going to happen will be enormously beneficial for the markets. If that is a positive, I think that that's a bonus. In fact, we've had actually pretty, reasonable returns over the last, month as we've seen the markets kind of trying to find reasons to rally. But the outflows have been extraordinary. People have been taking these bounces as reasons to sell. And so I think it'll be interesting to see how the market reacts to this in terms of flows. We actually need to see the money flow reverse in order to feel really confident about these rallies.
Are you confident? Are you optimistic given that the president's tweet last night?
Look, I think it's a good thing. I actually think we're moving in the right direction, but you just have a big problem with the whole story, and that's that we are in a slowdown. Now, even though we have really strong earnings, even though they are slowing, they're still quite strong. The fact of the matter is you have more negative news than positive news continuing to come out of earnings. And I think that continues to be a problem. More slowing, more negative guidance, cyclical downturns. And we're going to continue to slow for the rest of the year. So to some degree, I think this could buoy the markets, but I don't think it's going to change what's going to happen in the second half, which is that we're going to start pricing in lower expected earnings. And that is going to continue to hit multiples in the market.
So it sounds like you think that this news coming out about the trade talk deadline being pushed on may just be a short-term adrenaline shot, if you will.
I think it'll continue to buoy the markets for a period of time, but I just don't see how it's going to last more than 6 months. At some point, the impacts of last year's tax cut will be over, and we won't have anything else, to sort of help buoy the markets. And while this will be positive news, you need something more than that.
What about buybacks? Something we don't talk about a lot. They're not sexy. I get it. The tax deal that you talked about did help companies raise a little more capital, using that to buy back more stocks. That has put a little bit of a floor on this market. Isn't that maybe, Gina, the wild card in all of this?
Well, buybacks have actually been a huge benefit for the markets for the last decade. I mean, this is a story. Companies have continued to go to that. They have continued to put a floor on the market. So I'm not saying that we're going to see the markets fall out. I'm simply saying that multiples have to soften. And if multiples have to price in slightly lower expected returns, then you're going to see a little bit. You could see as much as 5% come off the markets just from multiples repricing. I mean, you could probably see more than that, but that's the optimistic outlook.
Do you believe that we're going to end the year lower than we are now for the major U.S. averages?
I think we could, actually, Brian. I mean, I think that this news, don't get me wrong, it's good news. And I think that it will help investors reposition. But I think actually the markets, if you look at what has been rallying, it's actually been pretty defensive stuff, which tells you that market participants are looking for you're using these opportunities to shift out of growthier stocks into more defensive stocks. And I think that shift's going to continue.
And what would be, I guess, then the big variable in the second half of the year? We know your views. You're a little more sanguine on it. What could be the most optimistic? Listen, it's Monday. Why not? Let's be a little optimistic. What could be the most optimistic scenario in the second half of the year, Gina?
Well, look, I think the optimistic scenario is that if we have a continued Fed pause, is that you sort of ride that out, which is to say that we don't have to reprice dramatically. And you could actually, even though we're slowing from 25% earnings growth to 10% earnings growth, that's still pretty strong. So we theoretically could have a good year this year. Just off of that. And so kind of assuming that we don't have to experience the kind of natural slowdown that's happening in the economy for at least 6 to 12 months, then you could actually still have a decent market for the year.